Hello, this is Kevin Stewart from Briggs & Veselka. I'm a principal in the advisory practice where I lead a team within the client accounting services, an advisory team where we serve as the outsourced accounting function for many companies, as well as provide advisory services for technical accounting issues, as well as process improvements within the accounting process. Today, I want to give you a little bit of an update on SBA, on the PPP, specifically around the 4 forgiveness questions that we received the most that we got clarification on last Friday and Saturday when the SBA released the PPP application for forgiveness. And so, as you see on the link there, what we were happy to see was this was a relatively straightforward, simple English explanation of many of the questions that we're getting, ready to answer. And so as you as bankers work with your clients and borrowers in receiving many questions, and we can help you assist in addressing some of those questions, this will provide you the information necessary to address their questions, or feel free to pass this information along. So one of the big questions initially is, what is the covered period? And so thankfully the SBA has allowed some flexibility for the borrower. Initially what we began to understand, and I think what each of you have communicated, is option 1 is the loan disbursement date. So as soon as the funds are received in the borrower's account, then it became that was the covered period. And what option 2 was allowed for is an alternative payroll covered period date. So it's the first day of their first pay period following the PPP loan disbursement day. And so borrowers with a biweekly or more frequent payroll schedule, this allows for when those payroll periods are crossing over. Separately, the covered period is identified and noted within the application in multiple instances. So borrowers must apply the covered period wherever there's a reference in this application to the covered period only. Only within the payroll section does it allow for the alternative payroll covered period date. So what about payroll periods crossing covered periods? And so total eligible payroll costs incurred or paid, and I think that's very important. Our understanding previously was it was during the paid, so there's a lot of questions of can we pull payroll forward, or can we pull it back if we haven't made payroll previously prior to the 8 weeks? And the answer is it's more of an accrual basis here. So payroll costs are considered paid on the day paychecks are distributed, or when the ACHs are funded, so that credit transaction. Separately, payroll costs are considered incurred on the day that the employee's pay is earned. So again, similar to a year-end consideration, if payroll is earned on December 31st, 2019, that is the date that would be covered necessarily. We're bringing it back to this 8-week period. And then lastly, payroll costs incurred but not paid. So if it's incurred but it's not paid until after the fact, after the covered period, it would still be based on that incurred date. So it's eligible for forgiveness if it's paid on the next eligible regular payroll date. Next big question is around mortgage, lease, and utility payments, and kind of what are each of those. So again, this is based on a paid or incurred date consideration, and even if it's paid on the next billing date. So business mortgage interest payments. So we did know from the beginning that interest was included in this on mortgages, but it's on rent or on real or personal property. So this does include equipment, potentially vehicles, and other personal property items. I think that is a strong point of clarification. There is still guidance needed on debt beyond mortgage interest. And so that does refer to interest on other debt obligations that were incurred before the covered period. So that would be potentially lines of credit and other matters like that. So there is still guidance that is needed. So there's a lack of clarity there. Business rent or lease payments for real or personal property. Again, personal property there is critical. Equipment would be covered. So it is not just on office space leases or office space rent. And again, this must be for agreements entered into prior to February 15th. Lastly is on utility payments. And so the clarification here is electricity, gas, water, transportation, telephone, or internet. I do think there are still a few questions around transportation and what that really means, but that the utility payments have been defined here a little bit more clearly. And again, it is related to those agreements entered into prior to February 15th, 2020. Next question, and one of the bigger questions I think is around FTE, so full-time equivalents. So an average FTE in our previous understanding was going to be 30 hours. The clarification is it is based on a 40-hour work week, and there are 2 methods to calculate. We'll call it a normal method and a simplified method. In method 1, the standard method, so for each employee, you enter the average number of hours paid per week and divide by 40. Now, this is on an individual by individual level. And so then if one individual employee to work 60 hours, that would only count as one. So it would not be 1.5. It is one employee. An employee cannot exceed one. The second method is assigning one for employees with at least 40 hours per week and assigning a 0.5 for all other employees. As you can see in the table below, you see approach 1 that shows on the 20 hours per week that is really the same in both methods. 40 hours a week is the same in both methods, and then even beyond that. So the benefit of approach 2 may be if you have multiple employees below 20 hours a week, and to kind of round those up. So between the 20-hour range, you might get more bang for your buck rounding up. Otherwise, approach 1 probably makes the most sense and is probably going to be the most accurate. So the forgiveness adjustment around the FTE. There is a safe harbor. I think there was some discussion around this before. I think there was some understanding, but there is a little bit more of a clarity here specifically. So the borrower is exempt from the reduction in loan forgiveness based on FTE employees described within the previous slide if both of the following conditions are met. So the borrower reduced its FTE employee levels in the period beginning after February 15th and ending April 26th, but then the borrower then restored its FTE employee levels by not later than June 30th. So you could go that time period of reducing employees, but if you bring everyone back, or the majority of those people back, or the defined people back, then there is some benefit from a safe harbor's perspective. So forgiveness adjustments around salaries. So the application also does include step-by-step instructions for calculating the adjustment as outlined below. So it talks about, was pay reduced more than 25%? In determining the salary and hourly wage reduction, safe harbor was met. Determining the salary and hourly wage reduction. So the salaries during the covered period, alternative payroll covered period, are compared to the first calendar quarter of 2020. That is the clarification here, that in addition to the above, it is that first calendar quarter of 2020 that provides a little bit more clarity to us in the calculations. So what we know today can change tomorrow. So as each of you have been working with your borrowers, you have noted that some of these questions have been hard to answer because there's been limited understanding. And as that understanding has developed, some things have changed. Even previously, our understanding of FTEs was going to be 30 hours, and it is now 40 hours. And so with this, things could still change tomorrow even, so we just don't know. So we are here to help. So we can assist you at the bank. We can assist your borrowers with forgiveness modeling to maximize their forgiven amount, helping on monitoring ongoing expense, helping create those forgiveness packages or put together those forgiveness packages, assisting with preparation for SBA loan reviews, accounting treatment for clients, and even more. So we are here to help. Over the last 6 to 8 weeks, we have been trying to educate ourselves, partnering with our bank friends, partnering with clients, partnering with the borrowers of our bank friends to assist in wherever we can. So with our resources here, in each of these sites, there is a link. There is the SBA assistance, and you have your personal contacts within Briggs & Veselka potentially. Apologize for the stutter there. But please feel free to reach out. It has been our pleasure to work with each of you. It has been our pleasure to answer questions where we can and just partner with you as we get through this process of the SBA lending. Thank you again for your time and consideration, and we look forward to assisting in the future.